Have you ever bought the market only to watch it crash, or sold and then watched it shoot straight up? The problem isn't always your strategy. Sometimes you're simply trading against the trend. Today, I will teach you how professional traders identify trends before placing a single trade. Welcome to EzeFX Forex Academy, where we simplify forex trading with practical lessons you can actually apply. If your goal is to become a disciplined and profitable trader, you are in the right place. So let's dive in. What is a trend? A trend is simply the general direction in which the market is moving over a period of time. Think of the market like a river, whether it's flowing downstream or whether it's flowing upstream. Swimming against it requires much more effort. The same is true in forex. Trading with the trend, it usually gives a higher probability than constantly trading to predict reversals. Now, what do I mean? Trading with the trend, that's moving with the flow, moving with the trend, is easier and more profitable most times than going against the trend. The trend is going up, you decide to go down. Going against the trend is more difficult than going with the trend. Just like I said earlier, the flow of river downstream or upstream. There are three types of trends, and let's look at them. We have uptrend, we have downtrend, and we have sideways trend. And the sideways trend can be called horizontal trend, consolidation, market ranging, accumulation. There are a lot of names to be given to these trends. So let's look at the first one, the first one. Let's look at uptrend. And what is an uptrend? An uptrend is formed when buyers are in control. In the forex market, when we say buyers are in control, when we say uptrend, that means the market is going up, is trending up. Do you get? Is moving up, is being bullish, is going long. These are terms and terminologies traders use to describe an upward trend or a bullish market, or when buyers are more in the market. Okay, when buyers are more in the market, we see the market move up, take a direction and move there. So when we talk about an uptrend, we mean it's formed when buyers are generally in control, or we have more buyers than sellers, or more volume of buyers, that's in terms of liquidity, than sellers. Now, price continues making higher highs and higher lows, just like climbing a staircase. Okay, each step you put your leg takes you higher than the other one. This one is high, you put your leg on the other one, is higher than this is higher than this. So that's why we say an uptrend is like climbing a ladder, it's like climbing a staircase, where you have higher highs, under it you will have higher lows. Okay, then every pullback, that's every drop, every pullback is followed by another move upward. Okay, instead of buying at random, professional traders often wait for these pullbacks before looking for buying opportunities. B, downtrend. A downtrend tells us sellers are dominating the market. Just like we say uptrend, buyers are in control, downtrend, sellers are in control here. And downtrend, you can say the market is bearish. Okay, you can say the market is going short. Okay, these are terms you can use to identify a downward trend. Okay, price forms lower lows and lower highs, just like climbing down the stairs too. Lower highs and lower lows. That's what price forms in a downward trend. So instead of trying to catch the bottom, experienced traders usually wait for price to retrace before looking for selling opportunities. Let's look at the third one, which is sideways trend, or I said range bounding, or the other names I've given it already. Sometimes the market isn't trending at all. So, and when it's not trending, it tells you that buyers and sellers are almost equal. Just like the tug of war, when they do tug of war, you see that the side that has more muscular people, more energized people, and people that has the experience in it we pull the weaker side. The stronger side will pull the weaker side. The same thing happens in the market. If buyers are stronger, market tend to trend upwards. If sellers are stronger, market tend to trend downwards. But if both of them have equal power, just like tug of war, when you do it, you see that if both parties have equal strength, nobody draws the other to either side. They tend to keep drawing. Nobody just move up, move back, move up, move back, move front, move down. Nobody moves to each other side, crossing the line. The same thing happens in sideways trend, where you have equal number of buyers and sellers. Do you get? And in this case, price moves between support and resistance without creating new highs or new lows. Market just keeps moving, maybe in a zigzag form, upward, downwards, upward, downwards, upward, downwards, upward, downwards, upward, downwards. And this is called ranging or sideways market. So there are four simple ways to identify a trend. What do you see in your chart to actually identify, okay, this is a trend, market is actually trending and is giving you this type of trend of the other type? We have number one is market structure. The first and most important method is market structure. Number two is trend lines. Trend lines help you visualize the market direction. In an uptrend, connect higher lows. In a downtrend, connect lower lows. Remember, trend lines are guides, not guarantees. Number three, moving averages. Many traders also use moving averages. When price stays above the moving average, it often suggests an uptrend. When price remains below it, the market may be in a downtrend. Indicators should confirm your analysis, not replace it. Method number four, multi-time frame. Okay, that's, some people can say top-down analysis. Like, that's one of the biggest mistakes beginners make is trading only one time frame. Professional traders often begin from higher time frames to understand the overall trend before refining entries on lower time frames, and this is called top-down analysis. Stay more on this channel and we'll take you step by step each of these things, each of these 4 points listed here, from market structure down to moving averages, down to multi-time frames, and down to trend lines. Common beginner mistakes. Let's talk about mistakes that keep traders from identifying trends correctly. Number one mistake, buying inside a strong downtrend. Number two mistake, selling during a healthy uptrend. Number three mistake, confusing a temporary pullback with a complete trend reversal. Number four mistake, changing bias after every candle. Number five mistake, ignoring higher time frames. So how do you, after knowing all this, how do you identify a trend? Whenever I analyze the market, I follow the same routine. And step number one is start on the daily time frame. Step number two, mark swing highs. Step number three, mark swing lows. Step number four, determine whether price is making higher highs, higher lows, or lower highs and lower lows. Step number five, drop to 4 hour or 1 hour chart for trade opportunities that align with the higher time frame trend. Step number six, wait patiently for confirmation before entering a trade. This is not a stereotype way of identifying a trend. When it comes to time frames, you can, depending on the pair, if it's good, I can come down to 1 minute time frame to take and to look for entries and to take my entries. So let's recap today's lesson. A trend is simply the market's overall direction. Uptrends create higher highs and higher lows. Downtrends create lower highs and lower lows. Sideways markets move between support and resistance. To identify trends effectively, use market structure, trend lines, moving averages, and multi-time frame analysis together. Most importantly, avoid fighting the market. Let price guide your decision. If this lesson helped you understand trend identification, make sure you like this video and subscribe to EzeFX Forex Academy. In the next lesson, we will cover market structure, support and resistance, trend lines, multi-time frame analysis, where you will learn how to identify the price level that often influence market reactions and trade planning. Thanks for watching, and I will see you in the next video.